Hello, welcome to day 4. Today we're going to be looking at volume profile as well as the price ladder and how both of them can give you a little bit more insight than just a standard candlestick chart. So we'll be going through a few different examples and just having a look at a few strategies along those lines. So let's crack on. First up, we're going to tackle volume profile. I'll be showing you what exactly it actually tells you and also the importance of value. This is one of the main indicators on a volume profile chart, as well as some of the other smaller nuances that are very important to be looking out for. We'll then go into looking at a couple of different day types. Understanding the different day types will give you a much greater idea of the types of trades that you want to be employing on a certain day. So it gives you a good way of ordering your days and even ordering your weeks when you take it onto a longer time scale. Next up, we'll be looking at some actual trade setups. How do you actually apply it? How can you make some money from this? We're going to be looking at both continuation type trades where the market moves away from a certain area, where you see a shift in value, which again we will be talking about, and also balance type setups where the market remains in balance or reverts back to balance. And finally, we'll then be looking at price ladder. Your price ladder is where you actually see the orders from every person transacting within a market. And we're going to be looking at a few different ways of executing trades based on the price ladder. I've got a nice example of more aggressive type trade as well as more passive trade action. So we're looking at some of the things that I've been trading, as well as a little bit of a look into Alex's course as well. So that's going to be the completion of the ladder part of the day. And finally, just to finish off, a bit of trader development and a little quiz for you guys. This will sort of just be going through some of the things we've already touched on throughout the last 4 days. So just to keep you switched on, keep you thinking. So let's move on and start off with volume profile. What does it show? Here, what you've got is an entire day of profile. So each letter is known as a TPO, a time price opportunity. Basically, it displays every price that has been traded over a half an hour period. So if you look at the Ks, that's the first half an hour of the day. And basically the top of the Ks and the bottom of the Ks indicate the high and the low of that first half hour candle. Now it's always a half an hour period. This is a profile taken from a European session. So that's why we start on K and L. Profile began in America, so the first letters of the day are A and B, which start at 1:30 UK time. So that's why you get that slight difference and why we start on a K and L. So that's what each letter represents, a half hour period. They layer on top of each other, and that's why you get this bell shape distribution of prices. So that's what it's showing you firstly, the distribution of prices, where the majority of traders happen for the day. That's obviously the widest area. That's where the most half an hour periods have traded. So that's where price has been accepted quite a lot throughout the day. So let's crack on. What's all the little intricacies? First up, you've got the opening price of the day, nice and simple. You've then got your initial balance. This is the first hour of trade. Now, during the initial balance, it's often positioned to be in balance from the overnight and also just testing different prices out. Usually the initial balance is slightly thinner on trade as positions establish themselves, and then you get a bigger flow later on in the day. So the initial balance is just giving you that indication. The smaller the initial balance, the more likely that value will move away from it. We'll move on to this a little bit later. If you get a large initial balance, then people or participants have come in very early and established positions very quickly during the day. So that's what your initial balance shows you. You then have the M&N prints, which some people will also consider into initial balance because they are the start of the cash trading hours as well in Europe. So it's up to you, but generally you'll always look at the first hour on its own. Next up, you've got the volume value area. This is where 70% of volume has been traded for the day, distributed throughout the day. So it's an average where the majority 70% worked. And again, this is showing you where value's been accepted, where the majority of volume has been traded. So people are happy to trade around these prices. The market is comfortable to transact there. And you see as the market moves away, it comes back, it spends a lot of time in value. So that's why value is very important. And it's the shift of value that is key in market profile. Now, within value, it's not always within value, but quite often, or the majority of the time, you have a VPOC. This is your volume point of control. So that's the price where the most volume is being done throughout the day. And you have your point of control. That's the price where the most time has been spent. So the most different time periods have traded through that price. They're usually around about the same area, because generally if you spend more time in an area, more volume can build in that area as well. So they're key areas to watch out for. The market will often gravitate back towards them, particularly if they're very prominent. Next up, we've got a buying tail. These appear at the low where you get single prints, so just one letter creating a low, and then the market moves back into balance. What this indicates is that the market has moved lower, tested lower prices, and then found buyers, and they have pushed the market back up. Likewise, if you see a single print tail at the top, that's a selling tail, where again prices have moved higher and sellers have come into the market, pushed prices back down. So that's what the tails tell you. And also you have a close, obviously the last traded price. The close is very important in relation to where it actually closes on the day. So that's what it's showing you. They're the little elements of it that you want to be looking at. We'll now move on to why these are all important and what they really tell you about the day and what's going on. So we know all the different parts of the profile. Now we've got to move on to what it's actually really telling us. Now to do this, you need to be asking yourself three questions really. You need to be asking yourself what the market is doing, how good a job is it making of it, and who is in control. This is going to tell you how likely moves are to continue, to sustain the development of the move, how likely they are to reverse, and also how the market is going to trade off certain levels. So I'm going to start off by actually looking slightly backwards at who is in control. Now, I've broken this down to three different types of participant. That if you read different things, there's various nuances of different participant. I like to look at it as three. First up, you have the day time frame. These are your more local prop type traders, very much like we are here. In the grand scheme of things, they're more short term. They won't often hold positions overnight. Also, their size is not something that's going to be able to influence the market. So therefore, they're a lot more reactive to levels. When there's more day time frame participants in, the market will react off smaller, very obvious levels. And that's an indication that you've got the day time frame. It's also, because of their lack of size, unlikely to actually drive the market or influence a new trend. Generally, you'll see the market reverse until you get a larger sort of initiative type move. Next up, you've got a medium term time frame. These participants do have the ability to influence smaller moves. They're going to be a lot more responsive to larger levels. So they're going to be looking at key swing highs, swing lows, that kind of thing, rather than the nuances of the edges of value throughout the day and things like that the daytime trader is more interested in. They will hold their positions for a few days. As I say, they're going to have a little bit of influence, more so a little bit of influence as they get out of trades en masse when they break over certain levels. And then finally, you have what's known as the other time frame. Other time frame players are the more institutionalized base participants, so they're going to be taking on larger positions. These are positions that can't be executed just at one price. It's something that the day time frame and the medium time frame to a degree can do. So the other time frame participants have actually got to drive the market. When you see a sustained move and then value shifting, this is usually an indication that you've got other time frame participants in the market. And until you start seeing anything change, that's where you need to be thinking, right, there is clearly a flow here. And so the market is telling you that these moves are sustained. They are likely to continue if you start seeing that type of trade. So that's what's very important about understanding the different types of participant. Now, in terms of looking at what the market is actually doing, and also how good a job it's making of it. I've done this in a video type presentation, so feel free to rewind it, stop it at any point, think through what I've said. It'll perhaps give you a chance just to get things set in your mind. So have a watch of this and we'll come back in a moment. So see you in a little bit. Going to answer those two big questions. What's the market doing? How good a job's it doing? Now, value is the key indicator on how good a job a market is doing. Has value shifted with the move in the market? And is it being sustained continually higher or lower, or is it just ranging? Now, what we've got in this example in the left, clearly we've had a bit of a trend day. The market has moved higher. This is the S&P. We've got multiple single prints just here. Now, what that indicates is that longer term participants have come into the market. Initiative buying has driven the market higher. We've also seen value has shifted right up with the move as well. So this is a good sign that prices are quite happy to be accepted at these higher areas. You have got the VPOC right at the high, which can be a sense of weakness. I'll explain that in a moment. And then we continue with value higher once again, and again, and again. So this is looking like a reasonably good thing. Value is shifting higher. We actually get no overlap here as well. So clearly the market is doing a reasonable job of it. Now let me just explain this VPOC. The fact that you've got prices closing right at the very high of a day indicates that people are willing to buy at the very limit of a day. They are now long overnight. They are in need of continuation the following day. If we don't see continuation the following day, you've then got a lot of positioning towards the top of the day, which if we start coming off is going to start getting out. So be very aware of where the VPOC closes. I think a more preferable VPOC would have been around this area here. If you got that kind of thing, then it does show that value's been accepted higher, but not right at an extreme, so those positions are a little bit stronger. Nevertheless, the following day, we see a small test down in the initial balance and then balancing higher. You usually see a balanced day after an imbalanced day. The imbalance is the trend day, then you get a more balanced day the following. We then, as the arrow indicates, see value higher. Now, what is showing that this market is perhaps losing such a good job of what it's doing? Once again, you've got people very late on, the close is right at the high of the day. And this is indicating, once again, an over-enthusiasm late on, generally weaker hands driving the market higher last thing. And what we see here the next day is we do start coming back on ourselves a little bit. The trend's not over, value is still higher, so keep that in mind, take that forward. Until value starts shifting lower, the trend is not yet over. However, this weakness caused by participants getting long a little bit too late is perhaps why we see this dip off quite early. They start on the B prints and move higher. We get a new high on the C print. So you do see an initial attempt higher, but very quickly the market falls back. So it's doing a reasonably good job. What you need to see is then where value shifts from there. In the second example, we're seeing very range-bound trade. And ultimately what you're trying to achieve by finding out how good a job the market is doing is you're trying to actually tell yourself what kind of trades you want to be taking. Now, we've got 2 days of completely unmoved value. With that in mind, you're then thinking, right, I don't want to be looking at breakout trades. Value's not shifting at the moment. You need to see value starting to build somewhere outside of this area here. If you don't see it the following day, we get an attempt higher. We get the open a little bit higher on the day, but very quickly you start seeing the market drop straight back into value. You see it on B's and C prints, that brings us back into value. we trend right down to the other side on those C prints, and you're starting to think already, right, the market is not moving out of value, and this secondary move down late on the K print, this is an opportunity for a fade, because you know that value's not shifting on the day. VPOC has remained right bang smack in the middle of the previous day as well, so value's not changing. The market is doing a good job of maintaining value at the same prices. However, any kind of moves away from it down here are not doing a good job of shifting value. If you don't see value shifting with the move, then it's not doing a good job. More than likely to see some kind of fade opportunity and a move back up the range and back into value. So that's what value's showing you, and they're the two questions you need to answer to inform you as to what type of trades you want to be taking on for the day. Right, let's have a look at a few different day types. I'm going to go through some of the more typical things you do see. And the point of a day type is to give you an idea of the type of trades that you want to be implementing on those days. Now, if you can grasp it quite early what type of day we're going to have, then it's very easy to step away from doing trades that are not suited to that kind of day or that kind of trade that you're going to see. So let's start off with a P-shaped day. This indicates short covering. Now, what I mean by this is you don't get an initiative buying through a longer term participant actually putting on a new position or creating new value. You get it from shorter, medium term positions who then have to get out. So what happens is you see this very early shift away from the initial balance, and then the day balances out at the highs in a P shape. So it does initially look like a bit of a trend day. However, as soon as you've got that rush out, and this is the shorts getting out and buying to move the market higher, you then get this balance towards the top where the market accepts value a bit higher but doesn't continue moving value any higher. So let's move on and see how you can actually predict these, because it is doable, and that will then give you a clue very early on as to the types of trades that you want to be looking for. So what did we have a couple of days before? We had an open low and a move higher, value shifting higher up the page. Fair enough, so we've seen the shift in value higher. Stopped right on the level at 67s. That's the scale for the profile, just so there's no confusion. I know it says 62 right near that high on the profile. So it stops up at 67s. We then see the next day that the market tests lower. We get an open in value up here. We see a move lower. This is the first hour of that next day, the one with where the open is. You get this shift lower. We get a tail on the profile. So that's your buying tail. Buyers come in, buy it off the lows and push prices back higher. You also have on the candlesticks this hammer style candle, which again indicates that prices could be going higher. They do. We get a close right back at the top of the day and the VPOC near the high of the day as well. So 2 days in a row, VPOC has not shifted despite the attempt lower. So you've now got shorts in the market. The traders who push the market down here, they're not all going to get out. A lot of them who are feeling that this could be a shorter term high are not going to get out until we start seeing prices back above 67. So there you go. You've now got it in your head that there are shorts in the market. Could they all stop out? Where are they likely to stop out? Above that recent high of 67. So this tells you that on a break of 67, you want to be looking for a breakout trade. You want to be looking for momentum. You want to be looking for volume to pick up, for prices to start getting taken out and just taken straight bid. You'll see this on the ladder as it happens. And be aware that usually these types of trades happen quite early on in the day. So as soon as we get above this initial balance, which is 66 1/4, you start seeing that move higher very quickly. If you're not on it though, again, this is where understanding what type of day it's going to be, you can then start to plan your trades a little bit more around that. You know that there's probably going to be a consolidation phase at some point, and that's what we get up here. So you're then looking for places to get in, either long or short. I prefer to continue to trade it from the long side, just in case you do get any more initiative buying any higher, but also trying to gauge the top is that little bit more difficult. So that's an area I'd be looking at. These single prints, you had the Fs move higher, the Gs then came back down and created a low around 71.25. I would therefore be looking to buy any dips back towards 71s with your stop back below these single prints. So stops 69.5-ish, quite a tight risk reward, and then you're just looking for rotation back up this range, back up towards the VPOC, and then perhaps somewhere towards the high of the day as well, towards the 77, 76 area. So that's what I'd be looking for on a P-shaped day. It tells you the type of trading you want to be looking at early, and then what you want to be doing a little bit later on as well, because you know that people are going to start to get out, and they'll get out quick. So let's have a look at a trend day. This is slightly different. You see an initiative move, and then values continues to rise with the move. Obviously on a trend day higher, trend day low, you will see value continue to dip. So have we had a few clues to this? Yes, we have. We've got a large range on the DAX. This is a daily chart. So we've had, well, the best part of a month, the whole of January almost, range bound. This is late on in January, the breakout. We've had a failed attempt lower and close back in the range. So immediately when you see that, you should be thinking there's a good chance that we'll test the other side of the range and then quite possibly break it as well. This is what we got. We got the breakout, and you see value shifts higher. So that's on the first initial break up towards this high at 93. You then get the break of 93s and value shift higher once more. And then later on in the day, we get value shifting higher again. So there you have it. That's what you get on a trend day. You get multiple single prints and this continued bid in the market. So a bit like a P-shaped day, you are going to want to be looking at more breakout type trades, and you're also going to be wanting to look at trend-based trades. These are things like pullbacks. Once again, we see this pullback to single prints. This is a particularly favorite trade of mine, particularly in the DAX as well. I think it works very well, that you get this move back, the Qs make the single prints, the Rs test back. That's your opportunity to buy, and then the market moves higher once again. So look for this continued move higher. You will see a lot of flow in the market. You'll generally see volume increase as well. You do see volume pick up here. Not actually such a big day. So again, in terms of how good a job's the market doing, volume is not supporting the move higher in value. So it does add a bit of question, but you should see value shifting higher. You should be looking for single prints. And then in terms of trades, you're looking for pullbacks and continuation type trades. Next up, balance day. Now, what you get with balance day is you see a tail at both ends. You get a buying tail and a selling tail. Also, something that early on you quite often see on a balance day is a break of both sides of the initial balance. So we get it early on these M prints down here. So you get the M print break, this being the first half hour of the cash. You then get the ends, so the market turns higher, and you get the ends break out the other side. We then see rotation both directions. You get P's, Q's. Unfortunately, because of the scaling, you don't see the tail on the Q. So Q's go higher, R's go lower, S's then come back in. So you are seeing this continued just rotation up and down the range. What this tells you quite early on, particularly as you saw it on the M's and N prints, is that you do not want to be looking for breakout trades. You don't want to be looking for flags and continuation type trades. When we start getting to the high, you're looking for volume to dip off. You're looking for some kind of chart pattern that gives you a trade for a reversal. Any levels that are sort of beyond the extremes of the day become stronger levels, so give you a possible entry there. So that's how you want to look to trade these balance days. Balance days are quite common. Market, as I say, shifts from imbalanced to balanced. The majority of the time, the market is not trending in a proper trend type day. You do see a lot of balance days, so getting used to spotting them early and then changing your strategy accordingly is very important. But ultimately, that is what you're going to see on a balance day. These do require a lot of patience. Trades do not just open and then move straight to where you expect. When you are looking for these reversal trades, so say this was a level down here, you managed to get in towards these lows of the C prints, you're only really looking to back to the midpoint on these trades, maybe back to the initial balance low. You're not looking necessarily to take the trade and run it all the way back to the high. Any movement back to the midpoint, back towards the initial balance, that's where you want to be taking the profits on them. Likewise, on a balanced day, getting involved in this area in value is quite a dangerous game. It's very easy for the market to move higher from value, and it's very easy for the market to move lower. So staying out of there, being patient for these reversal and contrarian type trades is definitely advisable on a balanced type day. So let's move on. Slightly more interesting day, a double distribution. Now what you get on these days is you get two very prominent value areas. You can see here and here. Treat these the next day essentially as two different days. So you've basically got a VPOC on this lower day and then the obviously red VPOC up higher. So that's how you want to look to treat them. They're generally split very clearly by single prints as well. So this should act as a position that the market should hold above if we close in the top part and below if we close in the bottom part. So that's what you want to look for on a double distribution day. Clearly what has happened is we've moved higher and you were starting off to get this sort of P-shaped type day. However, clearly there's been new information or new initiative, perhaps a new position established, which has moved the market higher and pushed value with it as well. So the question the next day comes down to, can value maintain at these higher areas? Is it going to be accepted there again, or does it come back and fill in? If you get an open somewhere in the middle of the two value areas on a double distribution day, my more expected trade is you actually see the volume fill out, and we'll have a look at that in a moment on volume filling out on trades. But that would be what I'd expect after a double distribution day. In terms of trades on it, it is going to be more the information that gets you on this secondary move up into the second part of balance. But again, once you start seeing that range band, that you get this selling tail as we move higher as well. Once you start seeing that selling tail, then again you've got that single print trade, and you know that you're going to have to see a little bit of patience and watch the day rotate. On the candlestick chart, this lower distribution of value is this area here. It is essentially a small trend channel, but we are just seeing value rotate. Area of interest, top of the initial balance. We don't see any strong push inside the initial balance, and that's giving you a trade there. So any dips down to it do offer a buy and a move back higher. And as I say, if you're initially thinking this is a P-shaped day, then you are going to be looking to be getting out around those 10s, 11s, 12s area, somewhere here. Look at that P-shaped day. So that's what you got with a double distribution. Again, you're looking more for pullback type trades, range band trade. It's the information that gives you the next initiative move higher. I do this at the beginning of every week. I check my weekly profiles and mark on the very key areas for the week, notably the weekly value area high, the weekly value area low, the weekly VPOC. They're key areas that I want to be considering, and also the shape of the profile. As you can see, we've essentially got a double distribution week here on the Euro stocks. What this will do is it allows you to sort of plan your time a little bit better and plan how you think the week's going to develop. What we saw here, this is one of my old charts, hence the annotation. I annotate charts at the end of each day, just so I can have a look back and analyse how well I've done on a day, analyse things that I've been looking for. What we saw here, we got a reversal candle at the end of the previous week. This red candle here is this day here, or the beginning of the day. This is quite early on in the day. Now, what you get, as I said, with that double distribution, because we're in between these two areas of value, you expect some kind of filling out before we see too much move, and that is exactly what you get. All of a sudden, what that tells you is the beginning of the week's likely to be slow, despite the fact you've got this very clear reversal candle and you're expecting a move higher through the week. Initially, until this value or this volume and value fills out a little bit, it's unlikely that you're going to see a big move on the week straight off. So wait for that to fill out. You've got very clear opportunities for a buy as well. You've got the previous weekly VPOC, very prominent, so you expect the market to come back and test it. We get that, and because you're expecting to fill out a volume, gives you a very good opportunity to buy for a rotation higher. Ultimately, to see the trade work, you do want to get above this weekly value area. If you can get above the weekly value area high, you've then got the opportunity to move higher if you can shift value on the day above the weekly value area high as well. Key thing to note, and this is looking at volume on a composite, this area here, these 2934s, highest volume area on the composite chart. This composite looks at the volume traded over a longer period. And so once again, if you start seeing this rotation through those 2934s, back above the weekly value area high, then you can be expecting that move higher. But until then, it just gives you that idea of how you expect the week to pan out. Once again, it's also giving you a bit of a line in the sand. This is where on a candlestick chart you expect the last chance to buy the market to be at these 83s. However, you do realise, or you do notice, the weekly value area low is 5 ticks below. So it either gives you a stop below it or an opportunity to buy the 78s as well as the 83s. So that's how I look at a weekly profile. Make sure you mark your levels down at the beginning of the week. Now, this is kind of a putting it all together, but something that I do look at as well quite a lot. One time framing. One time framing is where you get a consistent move of lower highs or higher lows. So in this example, this is the Euros dollar currency. You get a lower high, a lower high, a lower high, a lower high, a lower high. What this is showing is that the market is never testing back, but also because you're not seeing any extension, you're not seeing any real initiative lower either, it indicates that the shorter term players are in control of the market. There's no real initiative, there's no attempt to really test back either. So if you think of this from a trade point of view, or as a trader, if you're short on any of this move here, any of this dip lower, you've not been put under any pressure at all. If you put your stop above the previous day's high, you have never been put under any pressure. You've been able to add each day as well. I'm talking from a slightly longer term perspective. Day traders are unlikely to hold these trades, but the shorter time frame participants are holding on to this. They're under no pressure, and what often will then happen is at the end of the one time framing, you see the move take it all back, and that's what you get on this move over here. You've also got some poor highs. What is meant by a poor high is you don't see any excess. You want to see at a high a tail. This is what you get here. that indicates a high. You see that selling comes in at the high. We're not seeing any excess on all of these days, and that is quite a bad thing. So there again, they become targets. Once the one time framing ends, which we get on this breakout, then you've got some pretty clear targets for your trade. Now, I've got marked down here, there's your clue. It's the first day on this sequence, and it doesn't always have to happen that we didn't actually get a new low as well. So there's a little bit of a clue. Also, value moves higher on this day. So you're getting some ideas that perhaps the move is over. The following day, we fill the single prints, fill out this slight dip of volume here and this dip of time spent in one area. You get that filled out, and then you get the explosive move higher as you finally get a solid break of a previous high. You get this move up, and the market closes towards the highs of the day. So that's just a look at one time frame. It's something to keep an eye out for. The difficulty is picking the turn. Of course, markets can one time frame for quite long periods of time. I've seen the Bunds in particular go for about 11 days, as well as the S&P. So be aware of your market, be aware of the extent to which it can one time frame if it gets going. But do remember, that is telling you that positions are generally weaker in the market, not strong positions actually properly shifting value.